Debate about the state of our housing market is firing up as the numbers show it coming back to life. Are conditions ripe for another real estate bubble, or have we and the Reserve Bank learnt our lessons from the boom of the last decade? Well, with me now to debate the issue is Bernard Hickey of interest.co.nz and Alistair Helm from realestate.co.nz. Good morning to you both.
Good morning. Good morning.
If I could start with you, Bernard. The Reserve Bank Governor's not worried about the housing market. The Finance Minister's not worried about the housing market. Why should we be worried about the housing market?
That's right. No worries, says everyone. Nothing to see here. Move along now. That's what they said in 2003, just before the asset bubble. We need to worry about asset bubbles. And when you see signs of house prices rising more than 20% a year ago in some parts of Auckland, we should be at least watching closely. And the Reserve Bank Governor and the Finance Minister should be watching, because it looks like New Zealand hasn't changed that much.
What else are you seeing in the housing market? Are some of the behaviours in terms of the lending of the banks similar to what we saw back then?
That's right. Some of the same things are happening. We are seeing quite a bit of 90 and 95% home lending by three of the major banks, so much so that the one that isn't doing it is complaining and saying this is a worry. And also, even just the last couple of weeks, we've seen 100% home loans on apartments going through. So yes, total lending isn't increasing overall. That's because most people are looking to repay their mortgages. But at the fringes, we're seeing the same sort of bubble-like activity, 90 to 95% home loans.
Alistair Helm, 90 to 95% home loans. Is that not cause to be worried?
I don't disagree with Bernard. I think you've got to be cautious, and certainly what we lived through between that period of sort of 2004 to 2007 was a hyperinflated property market, which really served nobody's best interest in the long term. But I think you've got to put things in perspective and recognise that markets move not just by price indicators but volume. And volume's the key thing I was trying to get at in the article I responded to Bernard on, which is last year we saw 60,000 sales in New Zealand. At the peak of the market before 2004, it's 120. We've come from 55 at the low point to 60. We might go up to 75 this year, 75,000 homes. We're not back at the 80, 90,000 where we were when the Reserve Bank were relaxing financial constraints, when interest rates were significantly higher and where the property market took off.
So is what you're saying that this is just coming from a very low base?
Yep.
And therefore it's being driven by just tight supply?
There's tight supply, but also there's almost like a frustration of people needing to move and wanting to get back into the market, and we see that. What we aren't seeing, as we saw back in 2004, 5 and 6, was investors. We haven't seen as much investor market, and therefore when that starts coming back, you might get a bit more of a bubbling of the market. But contextually, prices, if you take out inflation, are still down 5% compared to where the peak of the market was. So
but in Auckland, which tends to drive the market, in certain parts of Auckland, prices are up 20% plus in some areas. Now, it's true that housing supply is a problem in Auckland, and that's something the government, central and local, should be addressing as well. But it is a concern when Auckland, which leads the market, has suddenly just gone hot. And you can see it in all sorts of ways. Auction clearance rates are very high. In some parts of Auckland, prices, CVs that, let's say were less than $1 million, we're seeing prices go for 1.3, 1.4 million. And this is a worry for an economy which thought it had weaned itself off being just a housing market with a few things tacked on.
But Bernard, if you are a homeowner or looking to be one with interest rates low and house prices rising, aren't you pretty happy? Why would you not get into the housing market?
This is the slightly worrying thing. The Reserve Bank Governor actually suggested a couple of weeks ago he might cut interest rates when we have interest rates at record lows, 2.5%. And there is now a generation of particularly first home buyers who think, well, interest rates below 6% will never change.
But should he be hiking? Won't that just send the dollar higher?
Well, that's one of the risks. Maybe he needs to be looking at some macro-prudential controls or some other way.
Which mean what, sorry?
Macro-prudential controls, so perhaps loan-to-value ratios, changing those so we don't have any more of this 95% home lending, or changes to the way that banks have to put capital aside against their real estate lending. That would make sure that he doesn't have to put up the official cash rate and put up the currency, but also control the housing market.
Look, thank you both. That is Bernard Hickey from interest.co.nz and Alistair Helm from realestate.co.nz.